Crypto investors have endured more than their fair share of sudden market meltdowns in the last year, thanks to shocking revelations about poorly managed crypto projects. The latest seismic disruption in FTX, the fourth largest crypto exchange in the world, which until early November was considered to be an industry stalwart. In today's video, we'll be talking about how the FTX went bankrupt. Without further ado, let's begin. FTX bankruptcy saga. The bankruptcy filing ended a tumultuous week for FTX and bankman-fried. At the heart of the issue is FTX native token, FTT, which was eviscerated in a huge sell-off. In a rapid series of events that unfolded largely on Twitter, FTX attempted to sell a large part of its opening business to rival Binance, after a wave of withdrawals threatened to make FTX down. But just as quickly as Binance offered its rescue package in the form of an acquisition, the company backed out as a result of a corporate due diligence, as well as the latest news reports regarding mishandled customer funds and alleged US agency investigation. We have decided that we will not pursue the potential acquisition of FTX.com, said Binance CEO Changpeng CZO in a November 9th tweet, only a day after offering FTX a bailout package. What happened to FTX? FTX was valued at $32 billion only a few months ago. The MIT grad is one of crypto's most recognizable figures, a self-made young billionaire whose crypto empire once comprised of FTX and investing firm Alameda Research. The purpose of Alameda Research was to act as a liquidity provider for FTX. In 2019, when bankman-fried launched FTX, he tweeted, "Alameda incentive is just for FTX to do as well as possible." Until now, FTX had managed to avoid the liquidity crisis that plagued crypto earlier in 2022, after a wave of contagion rocked the market in the wake of the $60 billion collapse of stablecoin Terra USD. Much like governments bailed out banks during the 2008 financial crisis, bankman-fried extended offers of emergency liquidity to crypto companies caught in the carnage. Styled as an altruistic superhero with the acronym SBF, bankman-fried's Alameda stepped in as a lender of last resorts to crypto firms such as Voyager Digital, and Celsius went down the drain and threatened to take huge parts of the crypto market along with them. The trouble started with FTX native token, FTT. Ironically, it appears that FTX was built on a house of cards, not dissimilar to Terra USD. Like many other exchanges, FTX supported its own crypto token, FTT, designed to support its various projects. Owners of FTT could use the token to obtain discounts on trading FTX trading fees, or for staking to earn income from their holdings. It's not an uncommon strategy. Binance, for example, offers two native tokens, Binance Coin, BNB, and Binance USD, BUSD. But how the token was used to support FTX left SBF's empire incredibly overexposed to volatility in FTT. This week's tectonic events are related to a November 2nd CoinDesk story that questioned FTX solvency. CoinDesk reported Alameda Research's balance sheet was stuffed with FTT. Reportedly, as of June 30th, the single biggest asset on Alameda's $14.6 billion balance sheet was unlocked FTT, while the third biggest asset on the books was a $2.16 billion pile of FTT collateral. This suggested that Alameda and FTX were anything but separate businesses, and it left Alameda widely exposed to volatility in FTT. And that's the big downside to native tokens. These types of crypto coins are almost completely unregulated and can rapidly fall prey to the market losses. Please make sure you smash the super thanks button if you enjoyed this video. FTT contagion moved fast. Alameda Research wasn't the only whale with the big FTT holdings. Binance owned a sizable portion in FTT, stemming from an earlier deal with FTX. Binance dumped its first FTT holdings after the CoinDesk report, setting off the chain reaction. On November 6th, Canadian-Chinese billionaire ZAO tweeted, "As part of Binance's exit from FTX equity last year, Binance received roughly $2.1 billion USD equivalent in cash, BUSD and FTT. Due to a recent revelation that has come to light, we have decided to liquidate any remaining FTT on our books." The tweet precipitated a run on FTT and an exodus from FTX. FTT peaked at $78 on September 2021. From around $24 before ZAO's infamous November 6th tweet sent it crashing to its current trading price of less than $3. The imploding cryptocurrency trading firm FTX is now short billions of dollars after experiencing the crypto equivalent of a bank run. The exchange, formerly one of the world's largest, sought bankruptcy protection last week, and its SEO and founder resigned. Hours later, the trading firm said that there had been unauthorized access and that funds had disappeared. Analysts say hundreds of millions of dollars may have vanished. The unravelling of one of the once giant exchange is sending shockwaves through the industry. Here's a look at the company's collapse so far. Why did FTX go bankrupt? Customers fled the exchange over fears about whether FTX had sufficient capital, and it agreed to sell itself to rival crypto exchange Binance. But the deal fell through pending Binance's due diligence on FTX's balance sheet. FTX had valued its assets between $10 billion to $50 billion and listed more than 130 affiliated companies around the world, according to its bankruptcy filing. FTX and dozens of affiliated companies, including SEO Sam Bankman-Fried's hedge fund, Alameda Research, filed for bankruptcy petition in Delaware on Friday. This week's development marked a shocking turn of event for Bankman-Fried, who was hailed as somewhat of a saviour earlier this year, when he helped shore up a number of cryptocurrency companies that ran into financial trouble. He was recently estimated to be worth $23 billion and has been a prominent political donor to the Democrats. Was it hacked too? FTX confirmed Saturday there had been unauthorised access to its accounts. Hours after the company filed for Chapter 11 bankruptcy protection, a debate formed on social media about whether the exchange was hacked or a company insider had stolen the funds. A possibility that cryptocurrency analysts couldn't rule out. Exactly how much is involved is unclear, but analytics firm Elliptic estimated Saturday that $477 million was missing from the exchange. FTX new CEO, John Ray, said it was switching off the ability to trade or withdraw funds and taking steps to secure customers' assets. Is FTX under investigation? The Royal Bahamas Police Force said Sunday it is investigating FTX, adding to the company's woes. The police force said in a statement Sunday it was working with Bahamas security regulators to investigate if any criminal misconduct occurred, involving the exchange, which had moved its headquarters to the Caribbean country last year. Is anyone else investigating? Even before the bankruptcy filing and the missing funds, the US Department of Justice and the Securities and Exchange Commission began examining FTX to determine whether any criminal activity or secretary offences were being committed, according to a person familiar with the matters, who spoke with the Associated Press last week on conditions of amity because they could not discuss details of the investigation publicly. What are the repercussions? Companies that backed FTX are writing down investments, and the price of Bitcoin and other digital currencies have been falling. Politicians and regulators are calling for stricter oversight of the unwieldy industry. FTX said on Saturday that it was moving as many digital assets as can be identified to a new cold wallet custodian, which is essentially a way of storing assets offline without allowing remote control. FTX had also entered into a number of sports-related deals, some of which are crumbling. The NBA's Miami Heat and Miami-Dade Country decided Friday to terminate their relationship with FTX and will rename the team's arena. Earlier Friday, Mercedes said it would be immediately removing FTX logos from its Formula One cars.